Hello and welcome to Princess Dammy's Mind. Today you're watching me from MTM Studio in London. My name is Princess Dammy. Welcome to today's program. Today I'm going to be teaching my daughter, Becky, Business Studies. This is one way I help my daughter with her studies, so Becky can revise Business Studies even while walking to school, because she could put on a headphone to listen to me rather than listening to secular music. Becky could also watch this video on YouTube whilst revising in school or at home if I'm too busy to attend to her. So Becky could also share this video with her school friends who might be needing help in business studies area. And any other person as well that's watching this video might benefit from watching this video if they are into business or if they're entrepreneur. So this video has been in series so as to cover all the GCSE Business Studies syllabus that Becky is taking in school and will be sitting for in May 2020 GCSE Business Studies exams. I believe parents are the best teachers, so I decided to teach my daughter the best way I can. So Becky, good luck to you. Let's go. And Becky, normally I tell you to always bring in some refreshment before lesson so that you can have something to refresh with. So please go and get yourself a cup of tea, biscuits and everything, and make sure you're ready for this lesson. So some biscuits, chocolates, tea, drinks, juice, whatever you have will be okay. All right, you might just pause this video to get yourself some cup of tea. All right, now today's topic is why business have cash flow crisis and how to solve cash flow crisis. In the previous lesson we spoke about how to calculate cash flow forecast, what cash flow is all about. So today's topic is just an extension of last week's topic, okay, cash flow forecast. So we're going to be talking about why business have cash flow crisis and how to solve cash flow crisis. Becky, today you will be learning about why business have cash flow problems and how they can solve the problems. Okay, so I want you to get this, get this stuck somewhere in your head. It's about why business have cash flow problems and what they can do to solve the problems. So that's what you're going to be learning today. All right, so the aim of this topic is by the end of this lesson, you should be able to understand the impacts of cash flow forecast on suppliers, banks, investors, customers, and business managers. Why do I say that? The reason being that people that are mostly affected by cash flow forecast of a business are the business suppliers, the banks who will be lending them money, and the investors, people that are interested in investing into the business, then the customers who are buying the products from them, as well as the business managers as well, people that are managing the business. So these are the people that the cash flow forecast really do affect. All right, so we're going to be talking about them today. What's the impact of the cash flow forecast on this category of people: the suppliers, the banks, the investors, the customers, and business managers. Also, the aim of the topic is to find out the causes of cash flow problems. Why do they have problems of cash flow? Then you're going to be learning on how business can solve the cash flow problems. So today you have to put on your problem solving hat. Yeah, your problem solving cap, you have to put that on, because we're going to be learning about how to solve these cash flow problems that business do have. Then we will also answer some questions pertaining to cash flow forecast. So Becky, first, we're going to recap on what I taught you last week about cash flow forecast, just to remind you of what we spoke about, okay? Because it's very important that you understand and you still remember what we spoke about last week, because this is just an extension of last week's topic. So last week, I gave you a formula about cash flow forecast, and which states that cash inflow minus cash outflow equals net cash flow. And net cash flow plus opening cash balance will give you the closing cash balance. So it's cash inflow minus cash outflow equals net cash flow plus opening cash balance equals closing cash balance. The reason why the opening cash balance is in color, yellow color, is because these figures will always be given to you. The examiners will always give you this figure. It's not something you can calculate. It's something that is going to be given to you. They're going to give it to you and say the business has this X amount of cash balance in the account before the business started or before the beginning of each month. They will give you what is left in the business bank account or reserve. Okay, so but after the first time that they've given you this cash balance, the next month you're going to be able to calculate the opening cash balance from the closing cash balance. So the closing bank balance for instance, January will become the opening cash balance for February. But in January, when you're starting, they're going to give you the opening cash balance, because you can't imagine it. You can't just assume it. They're going to give you this figure for the first month. But comes the second month, you will have to calculate it yourself by calculating the closing cash balance for the first month. And the closing cash balance for the first month will become the opening cash balance for the second month. And then you carry it on like that until you finish the whole of the 1 year cash flow forecast. Okay, so the formula for cash flow forecast is cash inflow minus cash outflow equals net cash flow. So cash inflow is everything, all the money they received into the business minus all the money they want to pay out, and that will give you the net cash flow. Then when you know the net cash flow, you're going to add it on to the opening cash balance that was given previously, and then that will give you the closing cash balance. And once you know the closing cash balance for 1 month, that becomes the opening cash balance for the second month. Okay, so therefore so this is how so we now say that this cash inflow, we will put them in categories. We put all this formula in categories. Remember, we said category A is cash inflow, and category B is the cash outflow, and category C is the net cash flow, and then the opening cash balance is category D, and the closing cash balance is category E. So invariably what we said was A minus B equals C plus D equals E. When you do this, you have calculated cash flow forecast. Okay, so therefore E is the cash flow forecast that you must interpret or explain. So therefore, if E is a negative figure, it means there is a cash flow crisis. And if it is a positive figure, it means the business has enough cash to pay for all its expenses. Okay. We're going to use Excel worksheets to do some work right now. So let's open Excel worksheets just to explain that last page a little bit more. So follow me. So now this is the spreadsheet here that we drew similar one up last time when I taught you cash flow forecast. What I said to you was For you to be able to calculate cash flow forecast, you must be able to understand what goes under cash inflows. What is cash inflows? So the category A, which is the cash inflows, usually these are the kind of items that comes under cash inflows, the category A. So when they say income from sales, they mean revenue. That is the amount of money the business got from selling their products or services. So for instance, if they are selling earrings, whatever how much money they got from selling earrings becomes the revenue. So it might be called revenue. They might use the term revenue. They might use the term income from sales. So whichever terminology your examiner uses, just know that anything that's revenue is the same thing as sales. Anything that says income from sales, the same thing, it means revenue. It just simply means money that comes into the business from selling their products or services. And anything that comes in will fall under category A, which is the cash inflow. Then another example of cash inflow is loans from bank. When a business takes loan from bank, that goes under the inflows. That is money that comes into the business, loan. Then the next item that could be categorized as cash inflow is money invested by the business owners. So sometimes they call these capital. They might say it's a capital. Let me just put it in there. Capital. So they might call it money invested by the business owner. That's just a way to break it down grammatically. Money invested into the business by the owners, or money brought into the business by the owners. Yeah, it's called money invested by the business or capital. So they might use the terminology capital, or they might say money invested by the owners. Yeah, so that again forms part of the cash inflows, because the business put the money in there and it becomes a receipt. Like it's something that goes into the business, because they're not spending it, they put it in there to be spent later. Now another item that falls under cash inflow is the owner's savings. Maybe they have savings before they open the business or whatever, and they put their savings in there. That's another way a business can put money into the business as well, from their savings. Okay, the savings is the money they personally saved, and then they put it into the the money they saved, personally, and they just put it into the business, and it goes into the business and it forms a cash inflow. Another type of cash inflow is retained profits. That is, for instance, when a business makes a profit, they might say, okay, let's say they make a profit of £100. They might say, okay, from this £100, we're gonna reserve or keep aside £20. That £20 becomes a retained profit, the profit that remains in the organization, and the rest of the £80 might be used on something else. Yeah, but they might say, okay, this £20 we're gonna leave it into the organization. So if they leave it into the organization, it forms part of the cash inflows. Okay, category A. So sometimes in the exams they might use all these terminologies and even more, but these are like the common terminologies that they use for cash inflows. Anything that goes in: income, sales, loans from the bank, investments or the capital by the owners, owner savings or profit. Everything goes into cash inflows. And why they are cash inflows is because they are receipts. There's something that goes into the business that they have not spent it. It's something that they put in there to be spent later. Okay, now, so you must be able to know what sort of item goes under category A, which is the cash inflows. If you know this, then you're good to go to calculate cash flow forecast. Then the category B, such items that falls under category B, which is the cash outflows, are like buying raw materials. Your examiners might use terminologies like, buying raw materials. So when they say buying raw materials, it's just like, buying raw materials that the company will buy raw materials to be able to use for the operations. So that also falls under category B because the company is spending. So category B is about payment. Actually, let me go back a bit. So category A, which is the cash inflows, yeah, is always about money that comes in, money that comes in, money that comes into the business. Or let me just say comes in, yeah, or receipt, yeah, that is money they received into the business. All right. Now, under category B is always payment as well. So cash outflow means money out, money spent by the business. Yeah. So money spent by the business or paid. So either they spend it or they paid it to somebody. Is always, whatever happens, is a payment that comes out of the business. Okay. Now, that is it. So now raw material is one of the items that business pay for, and then they pay for inventory. They might use purchase of inventories. Yeah, that is just buying inventories. They might use the terminology like purchase of stock. It's still the same thing. Buying inventories, buying stock. So these are the kind of terminologies the examiners will use. And when you see those items, you have to put them under cash outflows, category B. Okay. When they say the company, spend money on marketing. So marketing again is like they pay money for advertisement or whatever. Then wages is like pay money to staff, or they might even use staff wages or wages or salary. They might say salary sometimes. Yeah. So it's like paying the people that worked for them as well. So all this comes under category B because they are payments. They might say rent. Yeah. Rent is rental of the office or rental of the factory or whatever location they're using for the operation of the business. Okay. And that comes under category B outflows because they are paying for it. They might say mortgage because mortgage is like when somebody buys a house and takes money. When a business buys the property they're using, and they took money from the bank to pay for the property. So gradually they will be paying money out to the bank slowly every month to repay the money they took from the bank for the purchase or for the buying of the factory or site or whatever. So again, so mortgage is the same thing like sort of like rental. Okay. So and it falls under category B because they are paying for it. Then interest on bank loans, that is money they are paying back to the bank. So this is different from loan from the bank. Okay, but this one is like interest on the bank. Yeah, interest on bank loans. So when business takes a loan, there's always an interest to be paid on the loan they've taken from the bank. So they pay this out as well. Okay, taxes as well. The government tax them, they have to pay for taxation. Then electricity and gas sometimes falls under the category B that business do pay for. They pay for telephone charges as well. Then they pay for the equipment, printers, computers, whatever. So the list of what companies pay for could be a very long one. These are just like common examples. In your exams, they might give you more items that goes under category B or category A. But all you have to be able to understand is, what are these items doing? Are they coming in or are they going out? If these items are coming in, then you lump them under category A, which is cash inflow. And if they are going out, you lump them under category B. When you do so, then you're ready to go to calculate the cash flow forecast. Once you put everything in the right boxes under the right headings, yes, for instance, now you've put everything that belongs to category A under category A, then you can do your total. Yeah, you put your total, yeah, in the first month. Yeah, you put your total there in the first month there. Here, yes, and then that's it. Then you're good. Then you're good to go. All right. Then hold on, let me just I want to get rid of that. Okay, now, so then you do the same thing for category B. You make sure you lump all the correct items that went out of the company as in payment, and then you do your total. And when you do your total, then you're ready to calculate the net cash flow forecast, which is going to be cash inflow, which is category A minus category B cash outflow, and that gives you the net cash flow. Okay, and when you get your net cash flow, and that gives you this item here, which is your net cash outflow. Then when you get your net cash outflow, you add that on to the opening cash balance. Remember, the opening cash balance is the number you're going to be given for the first time, that this is the cash that the business people have in reserve. Maybe they have it on their purse or already in their bank balance at the beginning of the business, of the period of the business. Then they give you this they will give you this number. Okay, let me say this number. Okay, let me say they give you let's say they give you £500 at the, or £5,000 at the beginning of the month. So, and let's say your cash net cash flow is £800. So what you have to do is to now add your net cash flow plus your opening cash balance to give you the closing cash balance, and this becomes your cash flow forecast for the first month, January. But going forward, for you to be able to calculate the second month, you need to now bring this figure here. This figure here, you have to transfer it over here. So which means for February, your closing cash balance for January will become your opening cash balance for January. So you're going to put 5,800 there, because that is the last cash balance that you have in your account in January. So you sort of like bring that forward here. And then when you do that, then you go up here, and then for February, you put in whatever cash inflows items comes in here. Then you do the same thing, like calculate the total the cash inflow, and you do the same thing for category B for February, until you get to the net cash flow, which is A minus B, and then you add this together to give you a figure there. Whatever figure you have in here, let me see, what am I doing there? So whatever figure you have here will become the figure here. Okay, whatever figure you have here in here will become the figure here. Whatever figure you have in here, will become your figure here. Whatever you have here becomes your figure here. Whatever you have here, becomes your figure here. Whatever you have here becomes your figure here. Whatever you have here, sorry, I think my computer is going AY now. Okay, so whatever you have here becomes your figure here. Whatever you have here becomes your figure here. Whatever you have here becomes your figure here. Sorry. Okay. So, and so forth until you get to the end of the month of the year, which is your January, your December. Okay, so you do that from January until you get to December. So when you do everything like that, you will be able to know what your let's go there. So you will be able to know what your cash flow forecast is for each month until the end of each year. So this is January, February, March, April, May, June, July. Actually, let me bring the figure the text from here. I'll just copy this. This one, copy, I just want you to see what I'm trying to say, because this means for each month. These are just month. So now, so just for you to know, so this is your January cash flow forecast, and whatever you get here will be your February cash flow forecast. Whatever you get here will be your March, and so forth and so on until you get to December. Okay, so when you get these numbers, then you're ready to go to interpret what the figures are showing you. All right. Okay, now let's go back to studies, to the rest of today's studies. So now, Becky, we're going to start today's topic, which is an extension of the cash flow forecast that we have just recapped, and which was what I taught you last week as well. Okay, now, so today we're going to be talking about the impacts or effects of cash flow forecast on banks, investors, suppliers, and customers. Why? This is because these are the people that the business cash flow forecast will be affecting. It's going to affect the bank. It's going to affect investors. Investors are the people that actually put their money into a business. Remember when we did the different kinds of businesses or business owners? We have sole traders, we have partnership, we have public company limited and private limited companies. And for the public limited company and even the partnership, people put money into the business. Those people are called investors. Remember? So the investors are going to be affected by cash flow as well. So the bank that will be giving loan as well to the businesses will be affected by cash flow forecast. Then the suppliers, that is to say, people that supply the business with goods or whatever, For instance, if somebody is running a fish and chip shop, it will be having suppliers of you'll be having supplies of like cooking oil, whatever, let's say cooking oil. And so those people that supply the cooking oil to the fish and chip shop are the suppliers. Okay, so cash flow forecast is going to be affecting suppliers as well as customers. Why is it going to be affecting customers? Yep. So we're going to talk about that right now. Okay. Why will cash flow forecast affect banks, investors, suppliers, and customers? So that's one of the things. Those are the things we're going to be discussing right now. Okay. So you just come with me and we'll talk about it. Okay. Now, so impacts or effect of cash flow forecast on banks and investors. I just want to talk about the banks one and investors first and foremost before I go on to the customers and the suppliers. So what are the impacts of cash flow forecast on banks and investors? So both of them are concerned about business cash flow forecast because they are concerned about their money being paid back. At the time they agreed, it must be paid back. So for instance, the bank gave a loan to the business. The investors as well put money into the business as investing so that they can get some money back for themselves as well. So for instance, a bank might give a loan to a business and say, okay, I'm giving you this loan for a period of 6 months, and after 6 months you must have been able to pay everything by 6 months. At the same time, investors as well, give money to a business as a form of investment and say, well, I expect you to be able to pay this money back with interest on the money, and they will give a time as well. So these people, the banks and investors, expect their money to be paid back at some point at an agreed time, agreed date. So now the business cash flow forecast would enable the bank to decide whether it is wise to give loan to the business or not. Also, the investors will decide whether it is wise to invest into the business or not. So the only way they will be able to decide if it is okay to invest or loan money to this business is to look at the cash flow forecast. So where in the cash flow forecast would they be looking? They will be looking at if the cash flow is giving the business negative figure or positive. Okay, and in fact, not just positive and negative, they want to see how much money the business has left after it's paid its it's paid all its cash outflows and it's received all its cash inflows. So sometimes they may even be having positive figure, but it might be just small amount of money. With that kind of small amount of money, the bank might say, well, this cash flow forecast is very weak. We can't really rely on this because anything might go wrong with this company because it's got just a little bit left after it had paid all its expenses and everything. So the cash flow forecast gives like an information to the bank and to the investors, yeah, and which gives them like informed decision, allows them to make informed decision on whether it is viable, it is wise to lend to this business or to invest into this business. Okay, all right. So now we've talked about the bank. So now we're going to talk about the impacts or effects of cash flow forecast on suppliers. Why would suppliers be bothered about cash flow forecast of a business? Okay, so Becky, I'm sure you have heard about buy now pay later scheme that shops offer the customers. I know you've not really done that because you're still very young, but I do that sometimes when the shop says buy now and pay later. So which means I can buy whatever products, maybe I can buy my blouse or my trousers, now, and I pay them later. So some shops do say that to customers, say buy now and pay later. Okay, so in business, there's also something called buy now pay later for business people, but they don't use the word buy now pay later. They use the term trade credit. Okay, trade credit, which is this one here. Trade credit. Can you see? Trade credit. They call it trade credit. Sorry, I'm using my something to. Okay, they call it trade credit. All right, rather than calling it buy now pay later. But the buy now pay later, it's the same meaning as trade credit. So trade credit is when suppliers allows business some time to pay for the goods or services they supplied or provided for them, which is the same thing like pay now, buy now, pay later. Okay, so for other people that are not businesses, a shop might say buy now, pay later. But for business that is buying something from another business, it's called trade credit. So they allow them time to buy the product and then allow them to pay for it later. Okay, so this is an advantage to business because it helps them to manage the cash outflows effectively by spending less in the short term. For instance, when a trade credit, which is buy now pay later scheme, is given to a business, that means that business for that month particularly is not going to be paying anything to that supplier, which means the cash outflow will be reduced because they're not paying out. Instead of paying for that item or whatever they've been supplied with, they're not paying it, so the money remains with them. So the money that remains with the company, with the business, they might use it on other things. They might use it on other things that might even bring more money into the organization. For instance, if a business is buying bought some kind of materials to produce whatever product they're producing, and they've been given the trade credits, which means they're not going to have to pay for the item right away. The money they're not using on buying the item straight away, they might use it on advertisement. Can you imagine? And when they advertise their product, they get more people to buy the product from them. So that is just one advantage of a trade credit given to a business. So for suppliers, yeah, people that are giving them this trade credit, which is buy now pay later kind of a scheme, so they are called suppliers. So for suppliers to offer this trade credit to a business, they may wish to see the business cash flow forecast before deciding whether to offer the trade credit or not. Just like the bank wants to see the business's cash flow forecast, a supplier too, who is ready to give them this buy now pay later scheme, will ask for the cash flow forecast, so as for them to be reassured that the business would be able to pay them back when they're meant to take their money back, meant to be paid by the business. So I think you understand that, okay? So so for suppliers to offer this trade credit to a business, they will be asking for the business to show them their cash flow forecast before giving them the scheme of buy now, pay later, which is called trade credit. Therefore, cash flow forecasts can help to reassure suppliers. So when suppliers see that and say, well, this company's, it's got good cash management, and then, so they're happy to offer them the trade credit. If suppliers are concerned about a business cash flow forecast, they may insist on receiving payment before supplying the goods, or they may be unwilling to supply the business if the cash flow forecast is negative or weak. So, which is the same thing we'll be talking about. All right, so now we're going to be talking about the effect or impacts, because in your exams they might use the word impacts or effect. That's why I tried to put the two words there for you. It actually means the same thing. Impact or effect means, it's all just English grammar, okay? So it means the same thing invariably. Impact or effect of whatever. So now we're going to be talking about the impact or effects of cash flow forecast on customers. Why does it really have any effect on customer? What has it got to do with customers? Okay. Now, customers don't usually ask businesses to provide the cash flow forecast before trading with them. But where the customer is a big business, they may require to see the business cash flow forecast before doing business with them. This is because a large amount of money is going to be involved or at risk. Usually, Becky, when you go to a shop as a customer and you want to buy something, you will say, you won't ask them, can I see your cash flow forecast before I buy something from you? You can't say that because, you're not a big business. You're not a big customer. You're just buying like normal customers. But there are some business customers that are like customers who really wants a service or wants something provided for them by this business, by this company or business. And because it involves a lot of money, a lot of money, yes, they will ask they're obliged to ask the business, can I see your cash flow forecast? Especially if they're going to be putting down a deposit in advance. Okay. Let me give you an example, and I want you to, this example might help you to remember this bit of this lesson. When you were born, when you were like just about 2 months old, I wanted to expand. I wanted to refurbish the house, yeah. And I called in the bricklayers and everything, and they asked me to put down like £3,000 deposit to have to have the house refurbished, and then I said okay, and I gave the company £3,000. I signed documents and everything. And then they were working on the property, and the house, yeah. But then came Christmas, and they said, okay, they're gonna go for Christmas for about 2 days, and then come back after Christmas. So this company actually left, and they never came back. They went away with my £3,000. They never finished the job, and they disappeared. Can you imagine? So now someone like me I'm supposed to be. I was a customer to them, yeah? And because the amount of money that the transaction entailed was a big one, I should have asked them for the cash flow forecast. I should have asked them for even what's it called, a legal transaction. I should have asked them for so many things, but I didn't. So I took a bad risk. Okay. So, but businesses that are really, really smart, yeah, if a large amount of money is going to be involved, that they have to put deposit down before anything is done, they will ask for the cash flow forecast and say, okay, let's see your cash flow forecast, because if we give you this money to go and do whatever you want to do with the services you need to provide for them, or the goods they need to provide, and if anything goes wrong, would you be able to finish off this contract, or would you be able to return the deposit? So because of this kind of risk, big customers will ask businesses to show their cash flow forecast. All right. So this mostly happens when a customer needs to pay the business well in advance of receiving the goods or services. So the customer may need to pay a deposit before he or she receives the goods or service. Just in my own case, I needed to give them deposit because they asked for £3,000 because they needed to buy cement, they needed to buy blah blah blah, all these things, all this long list they gave me, and I must give it to them. And I give them £3,000 in advance before anything was done. So, but invariably I lost my money. So, but business will not want to lose money, because money is essential for the growth of any business. So they can't be foolish to just let it go like that. So they will ask for so many things, one of which is the cash flow forecast of the business. But asking that by customer, not just any customer can go into anywhere and say, oh, can I see your cash flow forecast? For instance, now you can't go to Marks and Spencer's because you want to buy a shoe and you say, oh, can I see your cash flow forecast? Because you've got nothing at stake. You're going to buy a shoe, the shoe is there, you just pick it up and go. But if you need to pay money in advance before receiving the items or the goods, or you get the services, you might ask for the business's cash flow forecast. Okay? All right then. Let's keep going. So now that I've spoken for like 43 minutes, you might want to take a break by pausing this video and then start again with me. Okay? Now, the next thing I want to talk to you about this cash flow saga is the causes of cash flow problems. Why do business really do have cash flow problems or cash flow crisis? In your exam, they might use the word cash flow problems or cash flow crisis. Problem, crisis is still the same thing. It's all English grammar. Okay? All right now. So, the causes of cash flow forecast are mainly these three items here. Poor management of cash. Yes, when a manager or managers of a business manages their cash poorly. How could they manage their cash poorly? Number one, for instance, if a company needs to buy a material, let's say they need to buy what can I use as an example now? I'm coming. Let's say a business needs to buy a fabric. Maybe they're making dresses, okay? Needs to buy £20 fabrics for a particular month to be able to produce maybe 2 dresses, okay? And the manager decided to spend £50 buying extra fabric for that month just to produce 2 dresses within that month, knowing fully well that he hasn't got the capacity or the labor to produce more than 2 dresses. Okay, now he has spent £50 on just buying materials, the fabrics, instead of buying £20. Yeah, and then it's only going to be selling 2 dresses within the same month. So the extra £30 he spent is like a poor management, because that extra £30 is not going to give him any income. Okay, so poor management of cash is one of the reasons why business run into cash flow problems. Okay. Another reason why business run into cash flow problem is business making loss. A business can make a loss when the cost of production is higher than revenue, which is just one of the examples I've just given you now. The cost of production is higher than the revenue it receives from sales. Okay, which is another reason why. Okay, now cost of production. What are the costs of production? Yeah, the cost of producing whatever item they're producing, which could be the cost of materials, the cost of electricity, the cost of whatever, is higher than the money they're receiving from the sales. So now, if somebody wants to produce 2 dresses, for instance, and then to produce that 2 dresses, it will cost him £100. But by the time he sells the 2 dresses, is only gonna get £40 from the sales of the 2 dresses. So the money is gonna be receiving from the sale of these two dresses is a lot more lesser than the amount it's costing him or the business to produce the 2 dresses. So does that make sense? That does not make sense. So business do make loss when the cost of production is higher than their revenue. Revenue means money they receive from sales of the items they produce. Another third reason for cash flow problem is long trade credit to customers. Remember earlier on we spoke about buy now pay later, which business do as well. Yeah, so they ask their customers their customers to buy from them and pay at a later date. So some might give 30 days payment and some might give 60 days payment. So when the repayment date is too long, somebody buys something from them and says, okay, pay me back in 60 days, or pay me back in 6 months time, that is a long trade credit, a long buy now pay later scheme, which will have adverse effects on the cash flow of the business, because every day, every time a business is spending money. So you spend money, you're not getting anything back, or you tell your customers to pay you, 60 days later, 90 days later, that kind of decision is the reason why business do have cash flow problems. And why do they give long time trade credit? Because sometimes business might be struggling to get customers, to get sales, to get people coming to buy from them, maybe because of competition. So now they will now offer this kind of buy now pay later kind of scheme, so that it will encourage, or it will entice the potential customers to come and buy from them, rather than buying from the other competitors who says pay now. Yeah, if someone else says pay now, no, people will not go to that person who says pay now, but they will go to the other person, other business who says, no, don't worry, you can buy now and pay me later in 60 days time, or you can buy me, you can even spread your payment in 6 months, whatever. So just because they want to gain more customers, more sales, they do that. But sometimes when it is too generous, when the long trade credit is too long, it affects the cash flow forecast of cash flow forecast of cash flow of the business. So it creates a crisis. So there's no rocket science about it. Poor management, business making loss, long-term trade credits to customers are the main reasons why business falls into cash flow crisis. So if you want to remember this in your exam, if you do PBL, acronym, then you can remember it. But it's up to you how you want to remember it. Poor management, business making loss, long trade credit to customers are the main reasons why business do have cash flow problems. And this in your exams might carry 10 mark questions. So this simple thing that I'm talking to you about right now might be 10, because it might be 10 mark questions, because it's a popular question on cash flow forecast in exams. Okay, so you must remember it, you must understand it, and if you don't, please do let me know so I can be able to help you. Okay, to maybe explain it better than this, but this is what it is for now. All right. Now, apart from that, we're now going to be talking about how to solve, because anytime there's a problem, there's always a solution. There's no problem without a solution. Yes. So if a problem could be identified, then there will be a solution to it. So we're going to be talking about how to solve these cash flow problems for business. Now, the poor management can be resolved. Business making loss can be resolved. Trade credits can be resolved. Yeah, if they are giving long trade credit, that could be resolved as well. So let's see how we can resolve the problems of cash flow forecast. Now, yes, one way to resolve it is increase sales revenue. When they increase sales revenue, that is, they can increase sales revenue by selling more of their products. So now, how could they even increase sales revenue? Number one, if they're going to be increasing sales revenue, they might need to do more advertisement or change their marketing strategy, okay, or have a marketing strategy that would boost sales. Or they must start giving a bit of discounts and say, okay, if you buy now, we can give you maybe 5% whatever discount or whatever on whatever they sell. And because of that, a lot of people will be coming into the shop to buy more items. So they can increase sales. When they increase sales revenue, that means the cash inflow will be increased, will be higher. Okay. Then another way they can solve the cash flow problem is to reduce the cost of production. Yes. For instance, if they're spending, let's say, £60 on electricity, they might decide to spend less by being conscious of how they use the electricity or whatever, and then maybe they might reduce cost of labor as well. Maybe they've been using full-time staff. Yeah, full-time staff, or people that are really charging them a lot of money to come and work for them. They might now start using maybe part-time staff, or people that are willing to take less. They just have to come up with a strategy to reduce their cost. Whatever is costing them so much, they might just look at the all areas of their cost, of their cash outflows, and see which area they can actually cut down on. Okay. Then another way they could solve the cash flow forecast is to delay payments. Just like some business will give their customers trade credits, which is buy now, pay later. They too may delay payment. That is, when they buy something from somebody, they might take advantage of buy now, pay later. Yeah. So that would delay payment. Okay. Cash outflow. So for instance, now, if they buy something from somebody, which is cash outflow because they're paying out, they may ask for trade credit. Yeah. So by taking trade credit from them, they will eventually delay payments, because trade credit means they are delaying payment. So let me just put it here. So they might do that via trade credit, or they might agree to trade credit. Agree to take trade credit from suppliers. Yeah, so for instance, now they might go into agreement with their suppliers and say, okay, can you give us trade credit as well? Yeah. So if they do that, that means they can be able to delay payments. So it's the same thing. Then, so this time around, they are the one taking advantage of the trade credit. Do you understand? Rather than the other way around, where they are giving trade credits to customers. Okay. So actually, I should make it clearer here. So they are agreeing to take. They're not the one giving. They are agreeing to take trade credit other than them being the one to give somebody trade credit. So they are the one taking advantage of the trade credit. So they will be the one to buy from the suppliers and delay payments. All right. Another fourth reason for that they could use to solve the cash flow problems is to get extra funding. So usually they can get extra funding by getting overdraft from bank. Though overdraft is very, very expensive as a form of source of finance of a business, but sometimes business don't have a choice, they just have to take it. But they must be mindful that overdraft is very expensive and may damage business profits as well, because overdraft is very, very expensive, carries a higher interest rate. Okay, so but it's just one way of solving the cash flow problems on a short-term basis. All right. In your exams, they might ask you these questions, and it's usually about 10 to 12 mark question as well in the exam. So you need to master it. It's something you need to master. You must understand it. So how to solve cash flow problems is majorly these four ways: increase sales revenue, reduce cost, delay payment, get extra funding. Just like I use you as an example, use your own personal example when we first did the cash flow forecast, and we have your own cash inflow as your pocket money from mommy, from your auntie, from you working for Tesco and stuff like that. So too, if you too want to increase your money coming in for you, say your cash inflow, you might work more hours with Tesco's. That is one way of you getting more money, isn't it? Yeah. And then, or you might ask your niece or your nephew to give you more money as well, to lend you money. So business to have their own way of increasing the cash inflow by selling more items, by reducing, and you as well as a person, if you want to reduce your cash outflow, which is like the money you're spending, you might decide that, okay, you're not going to buy a particular school shoe. Maybe you buy expensive school shoe, and this time around, you know that you're going to be running into cash flow problems. You say, okay, this time around, mommy, I'm not going to buy this designer shoe for school. I'm going to just go for maybe Marks and Spencer shoe or a shoe that is less costly. By so doing, you're cutting down on you're solving your cash flow problem. Okay, if you know that you're going to be spending more than you're going to be receiving. So business too have the same idea of reducing cost by reducing cost of production. So they will reduce cost of production. Whatever they are paying for, they can look at every item and look at areas where they could just chop up some few things and say, okay, we can reduce this, we can reduce that, and that is just one way of resolving cash flow problems. Or they may go into an agreement to take trade credit from their suppliers. Okay, so delay payments, and that will mean they will be able to delay payments. Then extra funding, this is very expensive, overdraft. Okay, and this item as well, like I'm repeating myself now, is an exam question, and it's a big 10-mark question in your exams. You need to understand it, you need to master it, and it's not a rocket science. You just need to put your mind into it. Okay. All right, Becky, we're gonna go further now. What I want us to do now is to look into some study tips. Solutions to cash flow problems often bring their own problems. For example, using overdraft to solve cash flow problems or taking bank loans with high interest rates. Okay? In answering higher mark questions on cash flow, you may need to discuss this, as you will need to justify a decision on how to overcome cash flow problems. I've already mentioned this earlier on about why using overdraft or bank loans as as a way to solve cash flow problems, especially overdraft. So in your exams, when they ask you anything about how to solve cash flow problems, you have to explain to them these 4 ways and tell them, you have to explain why using overdraft to solve problem might cause more cash flow problems as well, if not well managed, because of the high interest rate that it carries, and then it might damage business profit as well. Okay, because if they keep paying money back on overdraft, it's going to reduce their business profits. Okay, and when business profit is reduced, they might not have enough money to carry on with production of the business. So you must be able to understand this. If you don't understand what I mean here, please do let me know and we can go over this item once again. All right. All right. Now, the next thing I want us to talk about is just to summarize everything I've spoken about today, just to put them in summary. So what I spoke about, or I taught you today, is about cash flow being money flowing into and out of a business over a period of time. Therefore, businesses are obliged to make cash flow forecasts so that they can reduce the risk of cash flow crisis. All right. So businesses with poor management and those making losses usually suffer from cash flow problems. However, business can overcome these problems by increasing sales and delaying payments to their business suppliers. Okay. I'm gonna read that one more time for you. Summary. Cash flow is the money flowing into and out of a business over a period of time. Therefore, businesses are obliged to make cash flow forecasts so that they can reduce the risk of cash flow crisis. Businesses with poor management and those making losses usually suffer from cash flow problems. However, business can overcome these problems by increasing sales and delaying payments to their business suppliers. You can see there, I didn't talk about overdraft, because I know overdraft is one of the ways they can solve cash flow problems, but because it comes with its own problems as well, although you need to you need to add that in the exams, but you must explain to them that using overdraft comes with problems. Okay, overdraft can just be used on a short-term basis only. It's not something they can be using for a very long time. All right. Okay. Now, questions. Common exam questions regarding cash flow are all of these. Number 1, what is the difference between cash and profit? So this question is very common. They want you to know the difference between cash and profit. So now I want you to find out the difference between, I want you to be able to do this, to go away and use this as an homework for you, all these questions. I want you to be able to tell me the difference between cash and profit. And in your exams, when they ask you about cash flow, never you talk about profit. You should never talk about profit, because profit is different from cash. Okay? So don't interchange the word profit and cash. When you're talking about cash, you're talking about cash. When you're talking about profit, you're talking about profit. Profit is different from cash. Okay? Cash is the money you have available to operate your business on an ongoing basis, on an everyday basis. So cash is like a pocket money that the business has to use on its operation every day that is there. But profit is different. Profit is what they calculate after they've done the business, they've done everything, then they now say, okay, how much do we have left in the business? So cash is an ongoing thing, the money they must have to operate the business. After they've operated the business, now they want to see if they've made a loss or if they make the profit. Then they calculate and they come up with how much do we have left. So there's a big difference between cash and profit. Without cash, yes, cash as in the money that is readily available for a business to use in its operation. Meanwhile, profit is not what they need to have before they do a business, yeah? But cash is what they have or they must have, yes, available for a day-to-day activity spending on the business, okay? But profit is something they calculate after they've done the business in a month or within a year, and say, okay, how much now did we spend? How much do we have left that we can say, okay, this is the profit that is remaining in the business. So there are two different things, but you can still do your research and find out the major differences between cash and profit. And I want you to write all of this out for me. Sorry, I want you to answer these questions, yeah, and then I want you to answer these questions and send the answers to my email address, okay? The second question is, what is the difference between cash inflow and cash outflow? I'm sure we've covered that a lot now, but now you should be able to understand what cash inflow and cash outflow means. And I want you to send me an email answering these questions. The third question is, state 2 possible sources of cash outflow for a bakery. So when they say a bakery, they're just saying for a business, okay? Because a bakery is a business. So in your exam, they just want you to use your brain. All they are asking for you is, what are the 2 possible sources of cash outflow for a business? For instance, now they ask you for a bakery, yeah? For a bakery, what would they need as a cash outflow that they will be paying for? First, they will be buying the flours, wouldn't they? The flour to bake whatever they're baking, they want to bake with, flour, sugar, and then the staff, yeah, they pay for the staff, even the rental of the shop they'll be using. That is cash outflow, okay? Then the fourth question is, describe the possible impact of cash flow forecast on the business suppliers. We've covered that, so just need to give me the answer, okay? State 2 reasons why cash outflow. Remember, this number 4 question says on the business suppliers. Remember, it didn't say banks or investors. It's giving you specifically on suppliers, and it might give you specifically on banks or investors or on customers. But this particular question is being specific, asking for the impact of cash outflow, cash flow forecast on suppliers. So you must read the questions properly to understand what exactly they're asking you, because the impact of cash flow forecast on a business supplier is different from how it impacts a bank or investors or customer. So you must be able to differentiate how cash flow forecast impacts this for group of people. Number 5 question is, state 2 reasons why cash flow forecasts are important to business. Yeah, I know we've covered that. Just need to recap and understand and give me all the reasons, okay? Number 6, explain why offering too generous trade credit terms to customers might cause cash flow problems. Being too generous, we've covered that. Just give me the answers, okay? Number 7, identify 2 possible disadvantages to a business of the use of an overdraft as a solution to cash flow problems, okay? Cash flow problem. Then number 8, use the data below. Now in your quantitative exams questions, which is paper 2, I believe, you'll be doing a lot of quantitative questions, all right? And one of which will be cash flow forecast, definitely. So they're going to be asking you for something like this. They might give you the opening. They're going to give you the opening balance. Like when I say opening balance, it's the same thing as opening cash balance. It's the same thing, yeah? Opening balance, opening cash balance is the same thing, all right? So if they give you this kind of figure now, opening cash balance is 250,000, and then cash inflow is 3,250,000, and then cash outflow blah 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 3 million plus. Then they ask you to calculate the net cash flow for February, and then closing balance for February. Okay. Now, if they give you this kind of scenario, now they're asking you for February, so invariably you have to know that you have to calculate January before you calculate February. All right. So, and this is because they're telling you that the cash balance is 250,000. Okay, opening balance is 250,000, blah blah blah, cash inflow. And even if you are not going to, sorry, the closing balance for February and then the net cash flow for February. Okay, sorry. So they want you to calculate. Sorry, I'm confusing myself now. They want you to calculate the net cash flow for February and the closing balance for February. And they're giving you the information here that the opening cash balance is this, the cash inflow is that, and the cash outflow is that. You don't necessarily have to calculate January. They just want you to calculate February. Okay? So now, this is where you need to use your formula. A minus B, yeah, equals C. C plus D equals E. That is category A, which is cash inflow. Yeah. So now the cash inflow, which is category A, minus category B, which is cash outflow, equals net cash flow. Then net cash flow, which is the category C, yes, plus, sorry, yeah. So now net cash flow, which is category C, yeah, plus the category D, which is the opening cash balance here, we give you your closing balance. I'm not supposed to be telling you this because you're meant to go away and do this by yourself. Okay, so let me just stop from there. Okay, I expect you to go and use your brain now and do what you have to do to give me all the answers and the figures. Okay, now additional exercise I want you to do, Becky, is to complete the missing figures in the cash flow forecast table on the following Excel worksheet that I'm going to give you right away. So I want you to fill in to do certain things for me. Okay, so let's go there. So okay, Becky, this is the big homework I want you to do for me. Okay, so I'm going to send this spreadsheet into your email address so that you'll be able to work with this spreadsheet. I've given you the cash inflow details and the cash outflow, cash inflow and cash outflow details, figures for each of this month. What I want you to do for me is to be able to calculate, give me figures for anywhere you see yellow items. I want you to complete the missing figure there for me. Yeah, I want you to complete the missing figure there for me. As you can see here, they are. Yeah, all the areas that are yellow, I want you to put figures in there for me. If you're able to do this correctly, then I will know that you've understood how to calculate the cash flow forecast and that you understand what I have been teaching you all along. And I give you just one day to do this. Okay, please come back to me as soon as possible. I will send you an email and I'll give you the deadline date for this to be done, as well as the previous questions I put on the screen for you. Okay, so you don't need to copy all of this. All I want you to do is calculate what figure goes in there, what goes in there. Anywhere you see yellow lines, please complete the numbers for me. Okay, so now, Becky, we're going to recap on the keywords that we used today. We have used the word cash versus profit, cash flow crisis, trade credits, overdraft, sales revenue, suppliers, customers, investors, cash flow, cash inflow, cash outflow, cash flow forecast. You must be able to understand all these things. Okay, you must be able to understand all these terms. The other thing we spoke about was the net cash flow, which is very important. Net cash flow. Yeah, we spoke about net cash flow as well. Net cash flow. Who is calling me? Sorry about that, Becky. Cash flow. Yeah, net cash flow. So we've spoken about net cash flow, where then we spoke about closing cash balance. Closing balance. Yeah, you might say closing balance, or they might call it closing cash balance, because we're dealing with cash flow. It's always good to say cash balance. Yeah, because we want to know how much cash we have left, as in balance. Okay, so these are the keywords we use today, and I want you to understand each of these keywords. If you don't understand each of these keywords, then you don't understand everything I have been teaching you. If there's anything here that you don't understand, these terms, these keywords, do let me know, or you might just recap on the video. You have to go over the video one more time, or many times as you like, and recap on everything I've taught you in this lesson. Okay, now Becky, for next video, really truly I will be teaching you how to calculate cost, sales, profits, and break-even analysis. These are your paper 2. Everything to do with figures, quantitative analysis are your paper 2, and you must understand them. So now that we've done cash flow forecast and cash flow saga, I'm not going to go back on cash flow anymore, but I'm going to move on now to teach you how to calculate cost, sales, profits, and break-even analysis, so that you'll be able to understand what you need to do in your quantitative paper 2 exams. Okay? So now, Becky, do let me understand, or let me know if you are struggling with any aspect of this course or of this topic, so that I will be able to explain to you. Grab me at home, in the kitchen, anywhere I am, or call me from school, or send me an email, so that I'll be able to help you. Okay? If you don't understand what I have been trying to teach you on this video. So, and I don't want you to struggle alone. We have to share this struggle. So let us do it together. Come and get me and let me explain things to you if you don't understand. Okay? Because time is of essence. I don't want you to waste time just struggling. If you don't understand, just ask me. Okay? Ask me anywhere I am, in the kitchen, by text message, or whatever, or in my bedroom. Come and ask mommy question. Okay? So this is how I can help you with this topic. Now I'm not going to go back on cash flow after this, unless if you ask me questions. If you don't, I would assume you've understood it, and I'll be expecting you to have A star plus in this business studies. So bye now, Becky. I'll see you later when you come back from school, because I am going back to work now. And then that is it. That is it, Becky. Take care of yourself, darling. I love you so much. This is your mommy, Princess Dammy. Have a lovely day, my dear. And good luck in your exams. Thank you, darling. And ladies and gentlemen, you'll be listening to me from MTM Studio in London. If you have been following this course, do leave me a comment if you have any comment or any questions in respect of the video I'm making for Becky, or if you're learning anything, or if this video is useful for you, do let me know. Okay? Thank you very much for watching, if you have been watching, and God bless you.